What's happening in the markets? The speed of news is incredible, and staying ahead is everything. Get ready, because Bitcoin Bulletin is dropping the most critical updates you need to know right now. We've got major market movements, expert predictions, and game-changing industry shifts all on the table. Don't miss a beat as we break down exactly what's happening and what it means for you. Stick around for all the essential insights. We're diving deep into the sentiment shifts, the economic signals, and the big picture plays that are defining the crypto landscape. And we're covering the latest moves in altcoins that are making waves. You absolutely don't want to miss this. Subscribe and hit that notification bell so you never miss an update. The Fed's next move matters. As the financial world eagerly anticipates Federal Reserve Chair Jerome Powell's address at the Jackson Hole Symposium, Bitcoin BTC/USD has maintained a steady position above $113,600. This annual gathering, hosted by the Federal Reserve Bank of Kansas City, is a pivotal event where central bankers, policymakers, and economists convene to discuss the most pressing long-term challenges facing the global economy. The commentary from Powell at this symposium is often closely scrutinized for signals that could influence market sentiment and direction heading into the autumn season. Historically, speeches from the Fed chair at Jackson Hole have been known to cause significant ripples across various asset classes, including currencies, bonds, equities, and cryptocurrencies. In the immediate market context, Bitcoin saw a modest rise of around 1% on Thursday, recovering from a brief slump earlier in the week. However, it still trades below its recent peak of over $124,000, which was achieved on August 14th. Ethereum, ETHUSD, the second largest cryptocurrency, also experienced positive movement, gaining nearly 3%. Among other major digital assets, Solana, SolUSD, and Dogecoin, DogeGBP, led the pack with advances of approximately 4%, while XRP, XRPUSD, and Tron, TRXUSD, showed more conservative gains of 1.1% and 1.5%, respectively. Investors are keenly analyzing Powell's speech for potential market-moving insights. A hawkish tone, emphasizing inflation concerns, could potentially put pressure on riskier assets, possibly pushing Bitcoin back towards the $110,000 mark. Conversely, a more dovish stance, hinting at potential interest rate adjustments, might reignite optimism for earlier rate cuts, thereby providing support for digital assets. Interest rate traders are currently factoring in the possibility of 2 rate cuts by the U.S. Federal Reserve by the end of 2025, with the CME FedWatch tool indicating a 25 basis point cut in September, followed by another in December. On the bullish front, ongoing optimism regarding eventual monetary easing and sustained demand for spot Bitcoin exchange-traded funds, ETFs, continue to fuel institutional inflows. However, macroeconomic uncertainties and a strengthening U.S. dollar in anticipation of Powell's speech could pose risks, potentially triggering liquidations if Bitcoin's price falls below $110,000. Beyond the immediate market reactions, a significant development in the tokenization space is capturing attention. SkyBridge Capital, founded by Anthony Scaramucci, has announced its intention to tokenize 2 of its hedge funds, the Digital Macro Master Fund Limited and Legion Strategies Limited. This move aims to broaden access to traditionally exclusive investment products by converting ownership rights into digital tokens recorded on a blockchain, thereby increasing liquidity and divisibility. Experts like Ben Elvidge of Trilitech highlight this as a major milestone, noting that institutional interest in tokenization is rapidly accelerating, with a significant percentage of institutions already familiar with or actively participating in the tokenization of real-world assets. Will Powell's words spark a rally or a sell-off? We'll also look at why a prominent Harvard professor is rethinking his past predictions for Bitcoin. A repentant prediction. Kenneth S. Rogoff, a distinguished professor of economics at Harvard University and former chief economist at the International Monetary Fund, who famously predicted a Bitcoin crash to $100 in 2018, is now reflecting on his inaccurate forecast. At the time of his prediction, Bitcoin was trading below $10,000. Fast forward to today, and Bitcoin has surged past $100,000, representing a tenfold increase. On Tuesday, as Bitcoin hovered around $113,000, Rogoff admitted he had underestimated the cryptocurrency's resilience. In a recent post on X, Rogoff attributed his miscalculation to an overestimation of the United States' willingness to implement sensible cryptocurrency regulations. He had anticipated that policymakers would adopt a stringent approach to curb the use of cryptocurrencies in illicit activities such as tax evasion. Rogoff felt that the regulatory environment had been less than prudent, inadvertently allowing cryptocurrencies like Bitcoin to flourish in ways he had not foreseen. He specifically noted that he had underestimated Bitcoin's competitive edge against fiat currencies, particularly in its role as a medium of exchange within the substantial global underground economy, estimated to be worth $20 trillion. Rogoff elaborated in his new book, Our Dollar, Your Problem, that this demand from the underground economy acts as a price floor for Bitcoin. He also pointed out a perceived, blatant conflict of interest among regulators who, he suggested, hold significant amounts of cryptocurrency, potentially hundreds of millions or even billions of dollars, without apparent consequences. This observation implies a potential lack of impartial oversight and a possible vested interest among those tasked with regulating the space. Rogoff's revised perspective comes at a time when the cryptocurrency market is closely watching regulatory developments and macroeconomic indicators. His past pronouncements, coupled with his current reflections, add an interesting layer to the ongoing debate about the future of digital currencies and the role of regulation in shaping their trajectory. The fact that a prominent economist like Rogoff is acknowledging his misjudgment highlights the dynamic and often unpredictable nature of the cryptocurrency market and the challenges in forecasting its long-term performance. Could sentiment be shifting as key indicators turn bearish? We're examining the data that suggests a potential downturn is on the horizon. Bearish signals emerge. As the highly anticipated Jackson Hole Symposium approaches, several key indicators are pointing towards a significant bearish shift in market sentiment for Bitcoin. One of the most closely watched indicators is the 180-day call-put skew derived from options trading on Deribit, the leading cryptocurrency options exchange. As of recent data, this skew has registered a negative 0.42, a level not seen since June of the previous year. A negative call-put skew indicates that traders are exhibiting a greater demand for put options, which serve as protection against potential price declines, compared to call options, which bet on price increases. This trend is widely interpreted as a sign of increasing market caution and bearish sentiment over the medium term. Imran Lakha, founder of Options Insights, commented on X that this shift in longer-dated Bitcoin skew towards put premium could signify a regime shift. This interpretation is particularly noteworthy because it contrasts with the preceding 2 years, which consistently showed positive values, reflecting a prevailing bullish bias towards call options. The current negative reading comes despite Bitcoin only experiencing a modest pullback of approximately 8% from its recent record highs above $124,000. According to Lakha, this relatively small price correction has been sufficient to trigger a surge in demand for put options. Lakha further elaborated that both Bitcoin and Ethereum skews are moving towards put premiums as markets correct. He noted that Bitcoin is not expected to show call premium again until March 2026. The recent downward price movement has spurred buying activity in August, and September puts around the $110,000 strike price. Simultaneously, calls and call spreads are being sold as investors strategically de-risk their positions ahead of Federal Reserve Chair Jerome Powell's speech at the Jackson Hole Symposium. Nansen's research analyst, Nikolai Sondergaard, suggests that if Powell delivers exactly what the market anticipates, namely, signals for rate cuts starting in September, the crypto market might experience sideways to slightly bearish action, a phenomenon often referred to as sell the news. Conversely, any indication of a deeper or faster cutting cycle could invigorate risk appetite and potentially fuel the next bullish phase for cryptocurrencies. The increased demand for downside protection in Bitcoin aligns with broader trends observed in traditional markets, such as Wall Street, where traders have been hedging against potential sell-offs in major technology stocks. Jeff Jacobson, head of derivative strategy at 22V Research Group, noted that traders are actively purchasing disaster puts on the Invesco QQQ Trust Series 1 ETF, which tracks the Nasdaq 100 index. Another indicator signaling a bearish shift is the Guppy Multiple Moving Average (GMMA) indicator. Developed by trader Darryl Guppy, this tool analyzes the bands formed by short-term and long-term moving averages to identify trend strength and potential reversals. A bearish signal occurs when Bitcoin's price crosses below the GMMA bands, suggesting that bullish momentum is waning and long-term sentiment may be turning negative. This is often interpreted as a precursor to significant price weakness. Complementary indicators, such as the MACD histogram, also suggest a strengthening of downside momentum, reinforcing the narrative of an impending bearish trend. Is the market bracing for a downturn? We're breaking down the latest price action and the sentiment indicators that are flashing warning signs. Market momentum falters. Bitcoin is currently hovering around the $113,000 mark, with other major cryptocurrencies like Solana and Dogecoin showing notable gains, all while traders brace for Federal Reserve Chair Jerome Powell's upcoming address at the Jackson Hole Symposium. This event is critical, as it's expected to set the tone for market movements heading into the fall. Weakening employment data in the United States has fueled expectations for monetary easing. However, persistent inflation, exacerbated by tariffs, continues to pose a risk to assets perceived as riskier, leaving them vulnerable to disappointment. Nick Ruck, director at LVRG Research, highlighted the Federal Reserve's challenging position. The Fed faces a difficult balancing act: cut too soon and risk reigniting inflation, wait too long and growth risks deepen. This delicate equilibrium directly impacts the cryptocurrency market, which is often sensitive to shifts in monetary policy. The prevailing sentiment in the market has deteriorated rapidly, with the fear and greed index plummeting to 44, its lowest point in nearly 2 months, a stark contrast to its recent reading of 75 just 6 days prior. This sharp decline mirrors Bitcoin's price action, which experienced a brief dip to $112,500 earlier in the week before finding support near its monthly lows. Traders are closely monitoring key support levels. Some analysts caution that a break below $108,000 could potentially open the path towards $100,000. Alex Kupcikevich, chief market analyst at FX Pro, noted that Bitcoin's temporary support at recent lows was followed by increased selling pressure after it fell below the 50-day moving average, a traditionally bearish signal. He added, "Now, all attention is focused on whether there will be a pullback to a potentially stronger support area near $108,000. If there is no support there, a straight road to $100,000 will open." Kupcikevich further observed that the crypto market lost momentum even before the Nasdaq 100 stocks, reinforcing its reputation as a more sensitive barometer of investor sentiment. On-chain data further substantiates this sentiment of fragility. CryptoQuant reported that short-term Bitcoin holders are now selling at a loss for the first time since January, a pattern that has historically preceded deeper market corrections. Sentiment data also indicates a concerning trend. Trading volumes have decreased compared to July, despite August reaching new price highs. This, combined with a surge in retail activity, is a mix often associated with market tops. Some researchers posit that Bitcoin's recent price records might be more a consequence of a depreciating US dollar rather than genuine underlying value growth. A report from Presto Research suggested that when adjusted for currency fluctuations, Bitcoin's rate would be lower than its 2021 peaks and post-2024 election levels. With Powell's Jackson Hole remarks poised to shape the Federal Reserve's September meeting, traders are actively preparing for increased volatility. A dovish stance from Powell could trigger relief rallies across the crypto market. However, any hesitation or hawkish signals regarding interest rate cuts could accelerate Bitcoin's slide towards the $100,000 mark, underscoring the critical nature of the upcoming symposium for market direction. Is the market preparing for a downturn? We're examining the data that suggests a potential downturn is on the horizon. All right, that's a wrap on today's essential market updates. Bitcoin holding steady above 113K ahead of Powell's speech. A Harvard professor revisits his Bitcoin prediction. Key indicators flash bearish signals, and market momentum shows signs of faltering. Stay informed, stay ahead. If you found this breakdown valuable, smash that like button, subscribe to Bitcoin Bulletin for more critical insights, ring that notification bell so you never miss a beat, and drop a comment below with your thoughts. Follow us on all social platforms for real-time updates. We'll see you next time.